Well, hello, agents. Hello, everyone. So today I want to talk a little bit about risk, reward, and guarantees. And sometimes things sound too good to be true, but maybe they are. It's just you're not used to it. So today we're going to look at, can an annuity return 70% guaranteed, a guaranteed gain of 70% in 10 years. So that's 170% of the deposit after 10 years back on a guaranteed basis. So let's jump right into this. Using a multi-year guarantee annuity, the MYG annuity, can we really guarantee this type of return? Let's take a look. Let's look at the numbers. I love the math. So guarantee a 70% gain. Okay, the current MYGA, and we're going to assume 250,000 or more deposit. I'm using 500 on this. Guarantee a 70% gain. So these are going to be smooth and level. And then we're going to assume no withdrawal. So as you can see, guaranteed increasing rate. So after the first year, you have 5.45%. You've earned 5.45%. That's the APY, right? Annual percentage yield on this annuity is going to be 5.45%. That's the interest rate. However, with the compounding after years 2, you've got 11.2%, right? Because you're now went from 500 to 555 and so on down the road. 17.26, 23 in year 4, 30 in year 5, 37, 45 basically, 52. And in year 9, look, you're going from 52% to 61%. So that 5.45 APY, but with all the compounding and deferred growth, you're making like 8.74%, almost 9% in that last year off your initial premium, right? It's 5.45 off your compounded new accumulation value, but that's how that works. So in the 10th year, you have $850,000, 850,033, and that's a 70% gain. So yes, a guaranteed annuity can return 70% a gain in 10 years if the interest rate's simply 5.45% and guaranteed for that whole time. This won't change. This is a guaranteed interest rate. We'll get into that. I'll show you the illustration a little later. Again, and also this is tax deferred compounding, and this is the yield to term, 70%. So your 500 grows to 850,000. That's guaranteed. So if you have 500,000 and you want to make it worth 850, here's an option. It's all guaranteed. Set it, forget it, look at it in 10 years, and that's what you're going to have. Pretty cool stuff. So as I said in the beginning of this video, or as in the image shows, rich get richer faster. Why? Because this product offers a higher rate for the more money that comes in. So you can start this product with $5,000, but your interest rate's 5.2%, which only grows. That's a 66% total gain in 10 years. Still not bad. You can make 66%. 100,000 to 250 is 67. And then 250 above, all the way to 3 million, I think this company will take, will earn 70% on that money. So you put $1 million in, you're going to walk away with 1.7 million. Here you put 500,000 in, we're walking away $850,000. So because it offers this little banded interest rate bonus. So the company wants larger premiums for some reason. They pay more money for what they want. This is an A-rated company too. It's 118 years old. They're $23 billion. They got 19 million in admitted assets. With a small liability, gives them a 21% surplus. So they can pay all their claims and still have 21% left over in theory, right? That's the whole idea. That's how the math works out. And it's a 10-year surrender charge. So you don't want to leave early, right? There's a catch to everything. There's good and bad. So this one, if you have to totally wanted all your money out, they're going to charge you 8% plus or minus an MVA. And I've gone into MVAs basically. If interest rates are up, it costs you a little more to get out. If interest rates down, it might soften the blow. But they don't want to run on the bank, basically. But after the 10th year, this product's completely liquid and the client can leave. It issues to age 90. It is not available in those 2 states. It offers free withdrawals. Now, of course, if you take any money out, the compounding is less. You won't get your 70% because you will have withdrawn money. But this one, if you need access, allows 10% access in all years. California is limited to interest just in the first year, but probably not an issue there. The death benefit is a full death benefit. What does full death benefit means? Means whatever the value is at any time of death, the beneficiary can take that full value, no charges, no fees, just take the full value at death. Of course, again, if there's a death in the 3rd year, it won't grow to that 70% because obviously we didn't have the time to do that, right? There's a commission for the agents right there, and it's all built in. So if you're looking at this and wondering, oh, what are the fees going to charge? This is after fees. This is after charges. This is after all insurance company fees, agent fees, everything. The commission's paid. This is dialed in. This is the end result, guaranteed interest rate. There's no other moving parts to this. So just so you know, that's how a multi-year guarantee annuity should work. So these are non-fee based. So you might see fee-based ones that show a higher rate, but when you throw a 1% fee in, it's going to kill it. So be very careful and ask what you're going to get at the end. This one, I'm telling you, you're going to get 70% guaranteed gain. That's how it's going to be. 500 will go to 850. That's a very important question to ask when you're looking at these. And these rates were set in February, and they've been reaffirmed for March 2023. And of course, all interest rates are subject to change at any time. Market environment can change. The insurance company could get a total influx of business and want to slow it down. So interest rates are subject to change at any time. But as of right now, the interest rates are as you saw above. So what does non-volatility look like for you agents? Well, if you have a risk-averse client and you offer them this type of multi-year guarantee annuity, what I've seen over my career is total client satisfaction. Why? Because they're getting exactly what you said. If they put the money in at $500,000, in 10 years, they're going to walk away with $850,000. How can you not be satisfied getting exactly what you were told? Problems come in was when things are assumed and things change. This won't change. There's nothing assumed in here. It's all guaranteed. So anyway, that's how that works. If you're looking for an illustration, you can go to my website, annuityexperts.com. And at the top, there's that little MYG rate area. Go ahead and highlight it. And then there'll pop up deferred annuity illustrations. Go ahead and give that a click and it'll pull up this little order form, little fill out the request form. And if you do it correctly, you'll receive this. Thank you for your request. And, we'll send you an illustration. And this is a copy of the illustration's many pages. This is just a screenshot of the accumulation page, the ledger. And as you can see here, 5.45 for the first 10 years and 2.5 minimum guarantee thereafter. So this is different than, say, a bank CD or whatever. This, what you're going to get. If you decide to stay, and as you can see in the 10th year, 850, it all balances off on the assumed value. On the assumed value. And on the guaranteed value, both columns match off. And then thereafter in year 11, they could be different based on where they pay. So they're going to pay somewhere between $250 and $520 more than likely. But if let's say they drop you to the minimum of $250, it's still very strong. And the client can leave at any time after that 10th year, no charges, no fees, with whatever the accumulation value grows to. So again, this 2.5% right here is the strongest guarantee in the contract. Not too long ago, a year or two ago, they were talking about negative interest rates. So something like this is very strong because if interest rates should revert, you got a guarantee of 2.5% on this money forever. Anyway, I like that. So that's what the illustration looks like. So if you have any questions on this, or any agents you want to get contracted to sell this awesome annuity with this 118-year-old company, give me a call. We'll get you set up on how to sell it. We'll get you illustrations, all the contracting, all the client brochures and applications. I'll walk you through the whole process, explain all that stuff to you. That's what we do here. So anyway, that's my contact info. This is just a little disclosures, withdrawals prior to 59.5 may be subject to a change. Interest rates are, subject to change at any time. We're not doing this as a sales, as educational purposes for you agents and everybody. So anyway, that's the end of my presentation. And so in the end, can an annuity guarantee 70% gain in 10 years? Absolutely. You got to take the guaranteed interest rate, compound it out, see what it goes, assume no withdrawals. Yeah, you get 170% of your deposit back. So 500, 850,000. It's that simple. You put $1 million in, you're going to get $1.7 million. It's that simple. These are guaranteed multi-year guarantee annuities, no assumptions, all guarantees, no fees, and just insurance guarantees. So I hope you like that I hope you like that video. If you have any questions, give me a call, 800-373-3967. Follow me on YouTube and LinkedIn and all that stuff for the most up-to-date information. And we'll be talking to you soon. Thanks for watching. Bye-bye.